Yo, hello guys and welcome back to the channel. In today's video I'm going to be going over my top 5 UK dividend stocks. Before we get into the context of today's video guys, if you could please subscribe to my channel and smash the like button on this video as well, help the algorithm out, as my goal is to reach 1,000 subscribers hopefully in the next 4 months or so. That's my goal. So if you comment as well, get into the interactions, get the algorithm boosted, get this video out to more people so we can help this channel grow and help create more content for you. So yeah guys, without the way, nice and quickly today, I will go over my top 5 UK dividend stocks, and just for an exclaimer, this is my personal choice. This doesn't mean they are the best stocks out there. I don't think there's any best stocks. There's better stocks obviously, but this is my personal favourite. So we're going into a bit of information about the company, just showing you a bit about them, obviously looking at the dividend yield as well, and how the score of the dividend yield is. So let's go down onto, I created sort of a little portfolio here. So the first stock up is AstraZeneca. I think I pronounced that right there. Now let's go across, have a look at have a look at a bit of information about them. AstraZeneca, ticker symbol AZZN, and they were founded in 1992, and they're also in the pharmaceutical industry and the pharmaceutical and biotech industry. The market cap of 103 billion pounds, and there's a total shares outstanding of 1.31 billion. So just a bit of information there guys. I'm going to read a bit of the biography yourself. It just lists a bit of what they do as a company, what sort of obviously medicines and drugs they provide. I'm not going to bore you with reading all that guys, but you can find this sort of information online. So yeah, let's get into the bit we're on about here, is the dividend. So you can see there guys, AstraZeneca, as the analysis checks on the dividend, they have a 4 out of 6 score. Let's just have a look at each one. So the first one, they have a 2.8% dividend yield, which is higher than a bottom 25% of the payers in the Swedish market, which is an average of 1.57%. They're low compared to the top 25 dividend payers in the Swedish market, which is an average of 4.45%. But as you know guys, the higher the dividend, not always the better it is. So 3% is quite a good solid 2.73% is quite a good solid dividend yield in my opinion. I like to aim for anything between 3 and 6 usually, and that's just under, but that's still quite a good dividend. The payments have been increased over the past 10 years or so, which is always good to see that the company is continuing growing the dividends. And then the next one, with its high payout ratio of 175%, the payments are not well covered by the earnings at the moment. And the final one, the dividends in the next 3 years are forecast to be well covered by the earnings, with a 46.6% payout ratio. So you can see there guys, another graph. It shows obviously the 2.7% yield of the company, and the top of the market is an average of 4.4%. So it's a bit lower, but as I just said guys, it's not always the best to have the highest dividend yield. So that's the first stock guys, which is AstraZeneca. Then the next stock on the list we have is Unilever. So Unilever Group with a market cap of 111 billion pounds. Let's have a look at a bit of the information of the company. Unilever, ticker symbol ULVR, which was founded in 1930, and industry personal products such as soaps and things like that, household, with a market cap of 131 billion dollars. So look up, scroll down a bit more about the information of Unilever. Operates as a fast-moving consumer goods industry worldwide. Operates through these segments: beauty and personal care, food and refreshments. So they do have a lot of different products on the market. You can see their deodorants, food and refreshments, soaps, all sorts of different stuff. Obviously been a company for a long time now, 90 years. So let's get into that dividend yield now. So on the analysis check, they get a 5 out of 6 score, which is really good. Anything over 3, I do say, is generally good, as there's more good than bad. It's in the with a yield of 3.21%, it's higher than the bottom 25% of dividend payers in the UK market, which is an average of 1.83. The only bad blotch on this is it's low compared to a lot of the top dividend payers in the UK market. Unilever dividends per share has been stable the last 10 years. The payments have also increased in the last 10 years, which is always good, upping them dividends all the time. But it's reasonably low with a low payout ratio of 44%. Unilever's dividend payments are well covered by the earnings, which is always good. So they earn more than what they pay out, which is always good in business. The dividends in the next 3 years are forecast to be covered by the earnings of a 66.2% payout ratio. You can see on the chart there, the market cap's top 25 is 5%. Unilever pay a 3.2%. A few more good points. The current payouts to the shareholders, 45%, sorry. You can see it's just everything that was listed on the analysis score, guys. It's just showing it in a graph format. So yeah, Unilever. I don't personally own Unilever just yet, but I do want to be getting my hands on this stock. So that's Unilever out of the way, guys. So the next one we have is BP. BP, which is an oil and gas company, massive company all over the world. So look a bit at the information now. Ticker symbol BP on the LSE exchange, founded back in 1889, over 100 years old. This company integrated oil and gas in the energy sector. The market cap of £100 billion, 21.18 billion shares outstanding. So a bit more of the information, guys. It engages in the energy business worldwide. It operates through 3 segments: upstream, downstream, Ross and Fight. Can't really say that. So a bit of information there, guys. Obviously, it was affected by the bad oil crash back in 2008, I think it was. Correct me if I'm wrong, if anybody knows that, but a bit more information there, guys. If you want to have I'm not going to bore you reading all that, but you can find this information quite easy online, about information about a company if you do your own research. This is Simply Wall Street, which is a really good app to use for investors. I highly recommend it. So let's get on to that dividend. A 3 out of 6 dividend score, which is average. It's got a 6.3% dividend yield, which is higher than the bottom 25% of dividend payers. It's in the top 25 dividend payers in the UK market. Its payments have been volatile in the last 10 years. Obviously, with that oil spill, the share price did drop a bit, and also did the dividend. They've fallen over the past 10 years again, relates back to that. And with a payout ratio of 173%, BP's dividends are not well covered by earnings. And then the last one, which is also a good sign, the dividends in the next 3 years are forecast to be covered by the earnings of a 72% payout ratio, which is really good, over 50%. Again, the graphs you can see as before, just of what the information was said. It's a really great app to use, this, guys. Simply Wall Street. You can get a lot of information off here. So that's BP. That's the third stock on this list. The next one we have is British American Tobacco. I know some of you guys might jump down my throat and say, oh, cigarette company, it's an immoral company, but they pay really good dividends, so I quite like, obviously I always like that. Let's have a look on the information for this company, which is British American Tobacco PLC, ticker symbol BATS, right, okay. On the LSE exchange, founded back in 1902, so we've been a company for a long time, over 100 years. The sector, food and beverage and tobacco, with a £79 billion market cap and outstanding shares of 2.29 billion. Provides cigarettes and other tobacco products worldwide. It manufactures vapor, tobacco heating products, oral tobacco, and the nicotine products such as snus, tobacco-free nicotine. So yeah, it does pretty much every sort of product that you get on the market with cigarettes these days, whether it be vaping or anything like that. So now let's get on to the dividends for BA Tobacco. A good solid 5 out of 6 score, which is what you want. Obviously with a 5.8% dividend yield, They're in the top 25 dividend payers in the UK. The only blotch on there is the payments have been volatile, which with cigarette stocks they can be quite volatile, to be fair, as it's obviously something that people want to try and get banned cigarettes, so smoking isn't the best for your health and stuff like that. It's got a reasonable payout ratio of 73.9%, and the dividend payments are covered by the earnings. The dividends in the next 3 years are forecast to be covered by the earnings with a 65.8% payout ratio, which again above 50% is really good. And then in the next 3 years they are expected to be covered by the earnings. So that's British American Tobacco, guys. That's a personal stock that I personally own, which is I do own 3 of the 5 of these stocks on this list. So that is the next one is the final one, another gas and oil company, which is Royal Dutch Shell. This is one I personally own as well. Royal Dutch Shell, ticker symbol RDSA on the LSE exchange, founded 100 years. Another one that's a really long-standing company, 1907, in the integrated oil and gas energy sector with a market cap of $207 billion. Outstanding, listed on the market cap $176 billion and $7.83 billion outstanding. Bit more information, guys. Operates as an energy and petrochemical company worldwide. Operates for integrated gas, upstream and downstream segments. Obviously, the thing with these oil and gas companies, guys, obviously they will be trying to find alternative energy sources. I don't think we're using oil and gas forever. But obviously, at the time being, they're still obviously really, and I don't think we'll see any real change in the next 50 or 60 years, possibly. So yeah, onto the dividend yield now. It gets a 6 out of 6 score, so technically it is the best performing dividend stock on this out of the 5 stocks I've mentioned so far. It's got everything covered. It's got a 6% dividend yield, which is obviously in the top 25 dividend payers in the UK. They've been stable the past 10 years, which is different from BP, as its competitor. Dividend payments have increased over the past 10 years, which you always want, again, good dividend growth. And it's got a high 74% payout ratio, and the dividends are covered by earnings, which is good as well. And the final one, in the next 3 years, they are forecast to be covered. The dividend is forecast to be covered by the earnings of 64.6% payout ratio. You see, guys, it is above average on everything. Dividend yield versus the market. So that is it, guys. Let me know what you think of the UK dividend stocks I've chosen. Get in the comments. There's a lot of people aren't aware of UK stocks, obviously, if you're not from the UK. So let me know what you thought of these, and if you think they're good choices, and if I've put it in your head that you want to get these into your portfolio, that'd be good. And don't forget to smash the subscribe button, guys, and like this video. So yeah, that is it for today's video, guys. All the best. Bye.